Hi, good day, traders. Welcome to Trade City Academy. Guys, welcome to my channel once again. My name is Prince Remy Junior. Guys, in today's video, I'll be talking about a very simple trading psychology strategy, rather, and also some simple tips on how to milk money from the crypto market, even the bear market. But guys, before I go ahead to do that, please, if you've not subscribed to my channel, I always ask, if I give you value, if I give you nice content, all I ask back in return is your subscription. It helps us. It's a way of motivating, it's a way of letting you know that you're actually creating value and people are making good benefit from what you're doing. So please, guys, if you haven't subscribed, click on the subscription button. You can share the video, your crypto communities, your loved ones, people who are into cryptocurrency. It's a strategy. One good thing about strategies, it's meant for money making. So strategies are meant to make money for both an individual and organization. So guys, go ahead and share the video, but test it, confirm it's working, and you will use it for your profit. But guys, I also want to make this clear. I'm not a financial advisor. Anything I say here, treat it as educational purpose. However, if at all you must consider any of these strategies, go back to what has played out before and test it. Binance now offer a kind of a demo trading account. You can try some of these strategies on them before you go live, because this is purely futures, especially unless you want to do spot. So guys, in today's strategy, funny name, it's called Adam and Eve pattern. Adam and Eve strategy. Now it's very simple. This is it. This is a simple strategy. This is a picture of the strategy. Okay, so let me zoom in. So this is it. This is what we call Adam and Eve pattern. Now I will just explain. Then I will show you real life chart, and I'll give you some tips on trading this as well as other trading. Now, if you notice, there was a move. This was a drop. It's what many persons will call a dip. Price dropped from point here, this point A, came down to point B. I'll pick my cursor and I'll say, okay, this is price dropping this way. Now, when the moment price dropped, there was a bounce up. Now, this is a bounce up, what we'll call maybe a rally back up, trying to claim, okay, since I've dropped from my height, let me try to regain the height back. But that doesn't really play out in most cases because sellers are in charge of the market. So buyers will only push the market a bit to the point where their buyer power becomes lesser, then sellers will push it down. Now, the next thing you got to see there is a price down. So we're going to have something like this. I'm trying to look for a perfect curve for this, but you can see in the picture here. You can see in the picture, it looks like this. I'm trying to use trend line to illustrate it. It looks like this. Then the next thing you get to see, as you can see in the diagram here, is something like this. Then we have this. Very simple strategy. It's called Adam and Eve. And the question will now be, why is this called Adam and Eve? Now, if you know what called cup and handle pattern, cup and handle formation, if this is more like a cup and handle, the Eve part of it is like a cup. You know, now normal way you drink cup. This is the size of the cup from here down to this point. Now, this is the handle of the cup. The moment you spot that, it's a reversal pattern. And most of the times, it happens to be bullish. Now, it will be better if you have Adam alongside what you will call a cup and handle pattern. Now, the combination of two gives us what we call Adam and Eve strategy. So the moment you see an Adam and Eve pattern, people trade it, and in most cases will play out. So let me explain. Now, in between these two lines, there is a resistance zone, which is here. That is what we have here. This is the line here. Now, price broke this resistance zone, came back here, retested it, could not go back up, came back down. now form a kind of a cyclic consolidating pattern or structure. Remember, in this particular case, in this case here, the consolidation was not in cycle, it was just straight up consolidation. It just went back up straight. But for the if part of it, the consolidation give us a curve pattern. That's what we call cup and handle. It give us a kind of a cup shape pattern, unlike this other part. This other part, this might just be a single candle. This might just be a single candle or two candles. But in this case, this candle formed like a curve pattern. Is a period of cyclic consolidation. Now, the moment you have this, it becomes if. Now, one of the things you must look at for when trading this pattern is you discover the Adam bottom, that's here, the Adam bottom and the if bottom are almost on the same frequency. That's what we call a support zone. The two of them are almost on the same level, we call a support zone. Now, the next thing you will know to confirm is the moment the if pattern is going back up, that's the handle pattern of the cup, it must break the initial resistance and close above it. Now, if you look at this picture here, this if pattern here broke above this resistance, that's this line, and close above it. Now, when you see something like that, that's a good breakout, but hold on for a retest and rejection before you trade. Now, let's assume we had the case whereby there was a close above this, then this candle that came down. Let me go back to my own so I can edit. So this candle that came down, boom, went back something like this. Then obviously we might then have something like this and this. So in that point, it is not our other than if pattern is invalidated. So for it to be a confirmed strategy for you to use, this will not play out. However, what we'll have is something like this coming back to retest this line. We should have a rejection sign there. Look for reversal candle on this, especially on lower time frame. Then we have the bullish move up. Now, the moment you spot this, it is an Adam and Eve pattern. So Adam and Eve pattern is a trading strategy we use to trade the market. I'm just giving you a simple pictorial illustration of how it looks like. Let me quickly go over it before I go over to the chart and show you real life chart. I'm going to show you a couple of them on the charts and tell you why you shouldn't trade all charts you see. Now, this is it. Market dropped, boom. There was a strong rally back up trying to regain the former height. He hit a resistance, then he came down. And during this period of coming down, he consolidated, took time to consolidate, forming a kind of what we call a cyclic consolidating pattern, which is this shape. Yeah, this is this shape, a cyclic consolidating pattern. Then price was able to break the resistance, close above the resistance. If it doesn't close above this resistance, it is invalidated. Close above the resistance, then the next thing we had was a retest of the resistance, and boom, we are back up. So the moment you see this picture play out in your chart, it is a time for you to buy. Now, where do you buy? You buy from this resistance. That's this retest here. This is where you buy. You don't buy here. If you buy here, you're buying top. You're buying higher. Wait for the retest here. You try to buy from the point of the retest, but buy with a confirmation. That's retest and rejection. That is when you should buy. Now let's go back to our real life chart. So I'm going to start with what determines the way the market flows. And that coin is called BTC. So I'm going to go back to BTC. This is my BTC. I will remove this. I am on daily chart. I'm on daily chart. I'm on daily chart. Now, I'm going to draw. Remember my picture of Adam and Eve. Let me bring back the picture. It's very good when you learn with pictures. So I'm trying to draw this on the real life chart. This is it. So I will take something from here. Boom. This line I just drew is this line. This line now is this line. So I might want to call it A. Let me just try to give it number, alphabet rather. So I'll call it line A. Now, the next line I want to draw is a quick push up, which is this one. Now, I want to call it line B. So I will call it B. That's this push up. So I'll call it B. This line now is this line. That's the push up to this resistance. So automatically, we will want to say that we have a resistance around this zone. So we want to say that we have a resistance around this zone. We have a resistance around this zone. Now, the next line I want to draw is this one. So if you notice, this was the curve, that's the cyclic period of consolidation. Unlike this, now from the moment this one went back up, let's count the candles. We have this green candle. Let me zoom in so we can go together. This is 1, 2, 3. With 3 candles, we are back to our resistance line. But let's count the number of candles that took us back to this other resistance line. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So with 12 candles before we could go back here. That's what I said, that this other period, this second one, is a period of cyclic consolidation. So the candles you get to see here is longer than the candles you get to see here. This is just like a fast rally back up, trying to regain the former height. But for this other angle, this other side, it gives you a cyclic form. That's why some persons call cup and handle. So the candles here will be more than the candles here, which is the shape we've gotten here now. So at this point now, let's assume, did it close above the resistance? Ideally, it should have done that clearly, but if you want to trace that on lower time frame, we might confirm that it did. On daily, we didn't see it, but on lower time frame, on 1 hour, look at it, we saw it here. Now, if I go back to daily, you might not really see it like that. That's why it's always good to trade multiple time frame. Look at daily here. Boom, it did not close above. It only went back, it did not close above. But I can tell you that this long week might just be a retest. So let's go back to our 1 hour time frame and see. So on 1 hour time frame, look at it. We close comfortably. We even close with this and close with this. So we close above it on the lower time frame. Now the next thing you want to do is, okay, man, I should be longing this trade. I should be longing this trade. How do I start? Where do I? I'm now looking for what possible entry to long the trade at that particular point, because you've seen your Adam and Eve pattern played out. So you should be longing with the returns and rejection. So if I swing trader, ideally this did not play out well for you. So that's why I try to tell people, trade multiple time frame. Don't stick yourself to, I'm a swing trader, I'm an intraday trader. I trade 1 hour, I trade 4 hours, I'm a scalper, I trade 5 minutes. I trade daily, I trade monthly. No, don't limit yourself to one. Look out for opportunities, because if you were a day trader, this will not play out for you. This did not play out for you. But if you are a intraday trader or a scalper, you get to see this on 1 hour if you trade on 1 hour. So you get to see your entries on 1 hour. So look at it. Now, if I was trading on 1 hour, the moment I see this is 21,839. I want to look for buy, but I'll wait for the retest. This is the retest, and this is my entry point. So my entry point is on this bullish candle of 21,723. Now I will long that because I'm scalping. I will not want to stay long. I will scalp with the next 1 to 3 available candles, and look at where we went to. We went from there to 22,532. That should give you at least nothing less than 3-4-5% or so. So let's say if you're on futures and your leverage is 10, you should make at least some money from that. But if you have a small account size, please do not trade futures BTC. I don't do that. If you have a small account size, I don't recommend that for people who have small account size. Focus on other coins. So this is a clear picture of our Adam and Eve pattern playing out on BTC. Even with the market, the high Fed rate that came addressing the interest rate, there was a bit of it. So the next point next, where are we headed? Where are we headed? That means if we are able to break this line. So if we break and close above this line, we might be going back up. So it becomes a clearer confirmation of our Adam and Eve pattern. Let me see if we have something related to that in 4 hours. So we have to close above this for us to have a better picture of where we are going. Okay, let's go back to Matish polygon. Oh. So let's see if you have something like that on polygon. Really? Okay. Good. Let me just leave my trend line here. It's what I used to trade. I've been on polygon for 2-3 days now, and my trade on this has really been positive. So let's start from beginning. Let me bring back my picture. This is the picture. What's the first thing? We are drawing our line A. So let's assume this is our line A because it was a downtrend, which is this one. This is the downtrend that came at this particular point now. Let me even take it to the lowest. So let me take it like this. At that point, let me remove this. So the next thing is, boom, a rally back up as soon as possible, which is this. So that met our resistance zone, which is this. So this is our resistance zone. Now, these are drop down. These are drop down. That's this line. Now, this is a rally back up. That's trying to regain the former height. Now, it made a resistance here. Now, the next thing was the period of consolidation. Remember when I say cyclic consolidating pattern, that is this. If you look at the shape here, this was sharp. If you count the candles again, you count 1, 2, 3, 4, 5, 6 candles. And we are up to this resistance. But let's count the candle that took it back to this resistance. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, up to 15 candles. So the period of cyclic resistance must be greater than the number of candles that took the rally back up, try to regain the initial height, which is this. So the moment you see this, it confirms this is Adam and this is Eve. So I will have my Adam here. Then Eve comes here. So this is Adam and this is Eve. How do I trade, or where should I have entered this trade? Let's look at it. Now on daily, we have a good confirmation here. Look at this bullish candle here. That was yesterday. It closed above our resistance line perfectly. So what does that mean? Long. I woke up, I took this trade and I woke up, my TP has already smashed. Good morning. Because the moment I saw this, I smiled. I knew it was a money-making point. It was just a nice day to make money. So the moment you have this E formation here, this is the cup and handle I was explaining, even this one here. The moment you have this close good perfectly above this line, you long. And look at where we are. So even though you enter from here, that's 0.61. You've gone back to 0.70. So guys, this strategy is very simple. Now, this is why you should not trade just any coin. It might be good with analysis, but there are some coins you trade because what moves the market or what makes you profitable is not strategy, it's volatility. The reason why I say that is a blind person can open a trade. You just say, how did they trade? Buy and sell. You just click buy and leave it. He has not done any analysis, but luck might be on his side. The market will go bullish. He will make money. So what I mean is what really makes you make money is volatility. That's movement. You might have a perfect analysis, but if there's no movement in the market, you won't make a dime that day with your good analysis. So what I'm trying to say is, in as much as you're good with TA, try to trade momentum. Try to look out for coins that has momentum, where movement will. Most of the time when I give signals, I try to focus on coins that I know have volume, trading volume. So I know they will move, because you might be on this trade and you've not made anything and somebody will just take another coin and make money. So the reason why I have been focusing on Matic was because, let's go back to their Twitter page. This is their Twitter page. Now this news came out on the 13th. Today is 14th. As at 13, there was a good fundamental about Disney Accelerator that came out with Matic. Now, this alone was a fundamental that will raise the volume of Matic, the trading volume of Matic. So if I was to trade any other coin, and I know that Matic has this good fundamental, I would try to focus my trading on this. So I'll try to focus my trading on this coin that's already giving me a good fundamental. So the moment I spot that move or this Adam and Eve pattern on this particular coin, I trade it because it has volume. And if you look at it, it did, I think it is among Binance top gainer as of now, and it did a low percentage, more than many other coins in the money. So that's how you trade. Don't just wake up and just trade any other coin. Just trade any coin because you have good analysis. Try to look out for coins that have volume. That's where volatility will come. That will give you an edge because volatility moves the market. And when the market moves, that is when you make money. So guys, thank you so very much. If this Adam and Eve pattern or anything I've said here has added value to your trading career or life, please, guys, go ahead and like my YouTube channel, subscribe to the channel, like the video, share to your friends and loved ones, and stay tuned for more interesting videos. Thank you for watching Trade City Academy. Have a nice day.